India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel D'Souza, and joining me, Surbi and Sonia will be with us in just a bit. It's a rainy morning here in Mumbai, and it's going to be a bit of a tricky day, not just for the markets, but also on the weather front. Hey, Surbi.
Good morning, Nigel. You know, there are some mornings, some days, you're just glad you could make it. It's a near small miracle, but I think very thankful for the fact that we are here. Our teams are here, people who are bringing the show to you. We are all here, and we will report on the markets as usual. But yes, Mumbai, please be safe out there because it is a very turbulent morning. And actually, it's a very interesting setup for our markets as well, because you've got the global cues on one side. And Nigel, before we talk domestic markets, I just want to pull that up. Look at what's happened to Wall Street. There's a lot of sector rotation that's playing out over there, because if you just look at the different indices, big tech sold off big time yesterday. So the Nasdaq was down. That had its part on the S&P 500, which also ended lower. The Dow was flat. There's one index, however, where all the money was rushing to, and that's the Russell 2000. So the money moving from, big tech, those big, mega, magnificent 7 stocks, going to small caps. The reason why that happened was because of the inflation report that came in. But I'll talk about that in more detail as we go along. Short point is that, global cues are a little wobbly. But for us here, we have a very big positive cue in the form of TCS. More on that as well as we go along. But interestingly poised, Nigel, on the market, because, we had the banks recovering yesterday. There was some consolidation on the Nifty. I guess, what's your sense? How do we start?
Well, that's right. It's going to be a bit of a tricky start to the trading session, and we'll have to see how we go from there as well. It's going to be quite important, but let's run you through a couple of cues then on that front itself. Looking at the long-short positions, basically, in yesterday's trading session, there was some unwinding of longs, and that's what we saw in the previous 2 trading sessions as well. So that's going to be one of the data points that we focus on even in today's trade. Let's get that data point up for you. Longs down by close to 27,000 contracts odd. You have the position that's come down to around 78%. Let's pull up the absolute numbers. And what's happened is we have been talking about the FIs being net long, and they're going, a little bit full tilt on that side. Now, that's reduced a little bit because the net long contracts have come down by close to around 80,000 contracts, if you look at it in this week itself. And we've been talking about the clients, they have been net short. I'll tell you what, they have covered their short positions as well by around 80,000 contracts. 2.8 lakh contracts, that's come down to closer to around 2 lakh contracts odd. So both of them, that data point is converging a little bit. I want to see some shorts in the system, particularly from the FIs, because that's what gives us a case to see a bit of a short covering bounce. Then it appears there's a strategy going on. A short straddle is likely to be taking place to 24,300 call, 24,300 put for this contract that's going to be expiring. And if you just look at the premium between the two, it's roughly around 250 to around 300 rupees odd. So pocketing that 300 rupees, plus 24,300 and minus 24,300. The near-term levels, that's important. You have the resistance that comes in at around 24,500 odd. And the recent highs as well are closer to that. So the 24,500, that's the line in the sand. If you get past that, you get a little bit more optimistic. And then you believe that we're in for the next leg. For the time being, this is a bit of a resistance zone that we're looking at. In terms of support, every time we go to around 24,150, as we have seen in the last week or so, we see a bit of a bounce. If you want a reference point, well, the support level comes in at around this 24,100 odd. Now, let's focus on the Nifty Bank, because that's very, very close to the 20 DMA. Yesterday, in fact, it briefly just, came below that, and then it bounced from there as well. So the Nifty Bank holding on to this 20 DMA, that's very important. And if it has to do that, then HDFC Bank comes into play. It went dancing away to around 1,800 odd, but it corrected close to around 10%. And yesterday, it went down to around 1,600 odd, which was an important level. So in the last 1 month, it's still up close to around 4%. But if you look at it from the peak on that MSCI, news day, from there, it's corrected close to around 10%. So that's going to be rather important. This one as well is hovering around the 20 DMA. Finally, the 2 indices that we'll be focusing on in trade today. One will be obviously the IT index, because we have TCS's numbers that were pretty good. The index has been outperforming. You have the tailwind coming in because now you start factoring in some global rate cuts as well, going by the Fed futures tracker. And the metal index. When you talk about rate cuts, both these two indices are in focus. The tech space has the additional kicker because of TCS. What else,
yes, absolutely. Tech is a space to watch because, it's not just a, couple of basis points beat here and there, even the commentary, and we'll get to that. We'll hear more from the TCS management as the show progresses. But for the timing, I'm just dialing back to the point on Wall Street and why was this huge tectonic shift away from the Magnificent Seven towards the small cap? It's because of the inflation numbers that came in. Remember the jobs report on Friday? That gave the market some hope that rate cuts indeed will happen. Now you have a soft consumer inflation print. So let's pull up the numbers. That headline CPI number was actually down 0.1%. So there was no inflation. There was a degrowth. There was a decline that happened versus estimates of a minor increase, 0.1%. If you look at core CPI, again, the growth there was just 0.1% versus estimates of 0.2%. And that led to a massive drop in yields as well. The US 10-year yield was down to a level of below 4.2% during the intraday action. We haven't seen that since March. That was a pretty big move in yields. In fact, we've got the yield up. It's back above the 4.22 handle, but there was a lot of drama playing out in yields on the expectation that we're going to get those rate cuts from the US Federal Reserve. So why did money move out? Well, one theory is that perhaps if there are going to be rate cuts, you want to move to risk. And that's what was drawing in that flood of money into the Russell 2000 away from the Magnificent Seven. So that's telling you about the kind of shifts that we're seeing on Wall Street. By the way, a lot of big bank earnings, including Wells Fargo, Citi, JP Morgan, all of them are reporting today. So it's pretty hectic out there. But coming back to our earnings here now, why am I saying that TCS is perhaps more than just a small, uptick in terms of the estimates? It is a beat on the top line. It is a beat on the margin front and the commentary. I just want to put up one quote from the TCS CEO, Krithivasan. He says it's a strong start to the new fiscal with all-round growth across industries and markets. Almost all their verticals are back to firing. And when we hear more from them, Rima and Prashant, of course, in conversation with the management, will understand whether it's broader than just BFSI, which are the geographies, because TCS is saying everything is firing once again on a sequential basis. And that's the kind of commentary we're hearing from the brokerage notes as well. All of them are acknowledging that it's a beat, but how big is the commentary? Is the worst really over? And that could really light up a spark on the tech space. So that's one. The last cue, and definitely not the least, is the RBI Governor's exclusive, big exclusive conversation with us. The interview you heard right here on CNBC TV18. Now, the market cue there is actually, maybe you can say, mildly negative. Because he's not indicating that there are any rate cuts happening. The Fed might be looking at a rate cut soon, but in India, he's dashing all those hopes because he's saying that inflation hasn't sustainably moved to the RBI's target of 4%. We're still in the 5% zone. So he's saying, and growth is still holding up quite well. So he's saying it's too early to talk about interest rate cuts. You'll hear more of those sound bites as the day progresses as well. But yeah, we shouldn't get too excited, Nigel, because that's a short point when it comes to those rate cut, hopes, or even a change in stance expectations. He's pretty much in that conversation with Lata saying that, hey, listen, I don't think it's happening right now.
Okay.
But his comment was very important and very interesting. He said, but look, I don't want the markets to second guess. I don't want anybody boarding the wrong train in the wrong direction. So I'm not going to comment anymore on this.
Indeed. All right. Well, we'll get more about that conversation in just a bit. For the time being, let's run you through the equity call of the day. Chris Ward of Jefferies says that on the face of it, last Friday's US payroll data was not that dramatic, but it led to a moderate pickup in Federal Reserve easing expectations, which were further increased by yesterday's lower than expected CPI inflation data. He says that the Fed funds futures are now expecting a 60 basis of rate cuts by the end of 2024, up from 47 bips last Thursday. He says that the market is also now assuming that the first rate cut in September, he says, greed and fear would agree that this is now the base case, though clearly there are 2 more months of employment and inflation-related data before that meeting.
All right. Well, that's Chris Wood of Jefferies. Let's get you some money market views as well. Lakshmanan V of Federal Bank says the dollar index and US bond yields declined due to 3-year plus low inflation data, raising expectations of a September rate cut by the US Federal Reserve. He says Fed Chair Powell also noted a cooling jobs market and moderation in the US economy during his testimony. He says among G7 currencies, the Japanese yen saw a strong recovery as the dollar declined. Meanwhile, he's adding that Indian rupee weakened slightly due to increased demand from state-run banks and importers. For the coming session, he's expecting the USD INR pair to trade in a range of 83.30 to 83.70.
Okay, and on the bonds front, Lakshmanan says that the US Treasury is eased in the absence of any negative surprises from the Fed chair. Jerome Powell's commentary. He adds that the US June CPI came lower than expected at around 3% and increased the odds of an earlier rate cut by the US Fed. He adds that the coming sessions could see the 10-year benchmark bond yield trade in the range of around 6.95 to 7.05%.
Well, we have a lot of stock-specific action to track today as well, and we'll get to it in just a bit in our top 10 segment. We're looking at, of course, TCS, Interglobe Aviation, Anand Rathi, LT Foods, Brigade Enterprises, Adani, Wilmar, Infosys, and Affle India. That are all the stocks on the back of positive news flow. Prestige Estates, Vodafone Idea perhaps could open in the red, and we'll tell you why in just a bit.